Welcome back. I am Pratap here. Let me explain how NeoApp's supply demand zone top down analysis strategy builder will help you in defining a high probability setup based on a concept zone confluence. For those who are not aware of zone confluence, let me start with an example. So let me open Paint. Here I am drawing a rectangle. And assume it is a demand zone, a higher time frame demand zone. Say, for example, it's a daily demand zone. And you wanted to take a trade in 15 minutes demand zone. If your 15 minutes demand zone is in confluence with daily demand zone. What is the meaning of in confluence? If the 15 minutes demand zone is inside this daily demand zone, and this is called zone confluence. Say if a lower time frame demand zone is inside a higher time frame demand zone. That means 15 minutes demand zone is in confluence with the daily demand zone. This is called zone confluence. It need not be always inside, it even can intersect. Say for example, a 15 minutes demand zone, a part of 15 minutes demand zone can be inside the daily demand zone and another part of this demand zone can be outside. This is also called as zone confluence. Even at a zone low also it can be a 15 minutes demand zone. This is also called as zone confluence. So the point you need to understand, if a lower time frame demand zone is within or at are intersected at the borders of zone high and zone low, that is called a zone confluence. Hope you understand what exactly a zone confluence is. Okay, what is the advantage of going for this zone confluence? If this 15 minutes demand zone is there outside the higher time frame demand zones, there are higher chances of violating these zones. Always price will come to higher time frame and then it will start moving up, because the higher time frame zone will be having more pending orders and which might be having more power to push the price up compared to the lower time frame. So that is the reason why, if your lower time frame is there inside the higher time frame, and the success rate will be higher. But here we have some risk factors also there. Inside a higher time frame, you might be having multiple lower time frame demand zones. So which one you need to consider? Say in this example, do you need to consider the first one or second one or third one when you want to trade based on the 15 minutes demand zone? So for example, if you consider the first one, if due to any reason, if the price violates this and come within the second one, it will hit your stop loss. So what you do soon after it violates the first 15 minutes demand zone, your stop loss will trigger and you will exit, and after that it will further come down. Maybe the second one might be pushing further up. So it could be a problem, right? So that is the reason why one has to be very careful. Probably you need to adjust your stop loss if two 15 minutes demand zones are almost, they are very close. There was a concept called LOTL, I explained in one of our earlier videos. So instead of taking your stop loss on the first demand zone, maybe you can adjust to the second one. Something in such a way you need to do some kind of risk management. Or you might use some other concepts. Mixing with zone confluence can also increase the probability. Let us look into that such kind of example in our strategy builder. So let's go back to the strategy builder. I already defined at the bottom of this screen there is one parameter called zone confluence. I set 15 minutes with the daily time frame. So my entry time frame should be 15 minutes here. I already selected 15 minutes should be in confluence with daily demand zone at the bottom of this screen. Okay, here to increase the probability of the zone, let me check one more parameter. Let me add one more parameter, EMA confluence. What is that I want? I am selecting this 15 minutes EMA confluence, and I want this 15 minutes should have daily EMA confluence. Earlier we discussed zone confluence, but this is EMA confluence. Okay, I have two parameters defined. One is weekly and another one is daily. I am selecting demand zone. DZ means demand zone. DEMAC. D means daily. EMAC means confluence. So I am selecting this parameter. That means my demand zone, my 15 minutes, let me select demand zone. My 15 minutes demand zone should be having EMA confluence with daily EMA confluence. 15 minutes demand zone is having daily EMA confluence. That means assume this is EMA. Currently, my EMA should be here. So I want to give priority to this zone when my price is coming to this zone. So this zone is having 15 minutes zone is having daily EMA. Let me show you on the chart. So let me filter with this strategy. So here my entry time frame is 15 minutes. Entry zone is demand zone, and demand zone confluence is a daily plus 15 minutes. That means my 15 minutes should be inside the daily or intersected with daily. And that 15 minutes, this particular 15 minutes demand zone should be having a daily EMA confluence. So these are the 6 stocks filtered from 201 stocks. Let me select Nifty Bank. This is the 15 minutes demand zone. This demand zone is having daily EMAC. So when is the zone login? On 7th September 2023 at 13:15. It is having two base candles. So let me open my charting software, TradingView. So I'm going to the daily. Already this daily, I already marked a demand zone. This is the daily demand zone. Rally, base, rally pattern. Now it tested the daily supply zone price, and after that came out. Let us see in the coming days if the price goes into this, you can take an entry at 15 minutes level. So let us see how many 15 minutes demand zones are there inside this daily demand zone. So let me go to 15 minutes time frame. So here inside the 10 minutes, and what is our zone? On 7/9/2023, 13:15 is the leg-in. Yeah, this is the candle. This is the leg-in. It is having two base candles and leg out candle. Let us check. Yeah, it is having two base candles, and the leg out is 7/9/2023 at 14 hours. Yes, this is the candle 7/9/2023 at 14 hours. So let us draw the 15 minutes zone here. So this is the 15 minutes demand zone. Inside the daily demand zone. It is also having a few other demand zones, like here LOTL concept, level on top of level. It is also having one more drop, base, rally. That's why we should be very careful when you are going for trades on 15 minutes. You should be very careful when you are managing your risk. Maybe if this is your entry, you have to keep your stop loss somewhere here. But you need to see your risk management. Your target with this risk, can you manage by comparing with your target? Anyway, that is another concept, in-depth concept. Let us don't get into that at this point of time. So we want to choose one of these zones based on the EMA confluence. So which one is having EMA confluence out of these three? For those who are not aware of 15 minutes, sorry, for those who are not aware of EMA confluence, probably you will get a fair understanding. So we want the zone, one of these zones that is having 15 minutes, 15 minutes demand zone having daily EMA confluence. We may assume that could be a high probability setup. The higher chances, it doesn't mean it works always. Even though it is a high, it could be a high probability setup. Maybe sometimes the price may break this, it will touch the one below and then it may go up. That's why I'm saying the stop loss adjustment should be done, adjustment should be done in a proper way. Okay, let's go back to the daily chart. So this blue color line is the daily EMA. Which zone is having a, so here, the first one, the first 15 minutes demand zone. This is having daily EMA. Let me mark with a line where exactly the EMA at this point of time. So this is the daily EMA. We'll go back to 15 minutes again. So this blue color line, this is the demand zone. We might be thinking based on the EMA confluence, we are assuming this could be a high probability zone. It need not be always, but that is one way we can analyze. Okay. Hope you understand what exactly. Sorry. Hope you understand what exactly zone confluence means. One zone, that is lower time frame zone, is within the higher time frame zone. So 15 minute zone is within the daily zone. So that is called zone confluence. Here, what type of zone it is? Demand zone. So this is a demand zone confluence. So here also you have 15-minute zones. Your price may come here. If there are more pending orders, it may push the price further up. But they are having less probability compared to the zones inside the higher time frame. So rather than selecting this zone, you wait until the price reaches to this particular zone, because this is there inside the daily zone. So next time when prices reaches here, there is a possibility that it may go up until the next 15 minutes supply zone. At present, your 15-minute supply zone could be somewhere here. Maybe somewhere inside this daily supply zone. So at this point of time, our target looks, our return should looks very high. But when price is coming down, it may create new 15-minute supply zones. So by the time when it reaches this 15 minutes demand zone, you need to calculate what exactly the immediate 15-minute supply zone. And that could be your target price if you are taking at 15 minutes demand zone. But as per our report, at this point of time, it looks like the reward is 2.15%, and risk is 0.15%. It is a very high reward. It's almost 18 times, something like that. But by the time price reaches here, it may create new 15-minute supply zones. Then your target will be changing. Assume if the price is crashed and came all the way here, that means there is no supply zones. And this is the immediate supply zone when price reaches here. Then that could be a great reward. We should not miss such kind of opportunities. But the reality may not be the same always. The reality is when price comes here, there could be a swing somewhere here and then creates a supply zone and come down by breaking this demand zone. And again, it may create one more supply zone and come here. Then your reward could be very small from here to this point. And if risk reward is within your manageable or permitted, then we can accept the trade. Otherwise, you will ignore this. But anyway, the point here we need to observe Neo apps supply demand zone top down analysis strategy builder is having capability to define such kind of high probability setups. So you can see the setup in this search strategy. So the strategy is saying your demand zone confluence should be between daily and 15 minutes. That means your 15 minutes demand zone should be within the daily demand zone. And next, your 15 minutes demand zone should have daily EMA confluence. That way we are increasing the probability. That's why I'm calling it as a high probability setup compared to the normal way of doing the trading. I hope this information will be helpful to you. And this is the latest report. And you observe in the next coming days how this strategy is working in any of these stocks listed in this report. And thank you all for attending this video. Have a good day. Take care. Bye bye.